Hi everybody, this is Osprey from mychartcoach.com, and in this video we're going to take a look at some of the small caps that were in play today. So first up, let's look at PLAG. It had a nice move today, closed up nearly 47%. This is one of the stocks we were following in the chat today. It bounced off of 50 here. It's still in the bull zone at 56 on RSI. You got to keep an eye on this crossover on ADX here with the green line crossing over the black line. It needs to get back up the green line. The green line needs to get back above that black line in order to signal the bulls are still in control. Okay, so right now there was a bullish close today above this blue line. That is the 300-day simple moving average at 561. That is the key level to hold. Okay, that's the line in the sand right now. If it were to drop below that level, that would signal downside risk. You could see it drop down to this 200-day simple moving average at 460 to test support. If it holds, it could push higher. The big level to break above is going to be this $8 resistance zone, and then you have 950 and then 1150 up above. Check out the big volume. It has an increasing volume pattern going on here, and so check out also the long upper wick on today's candle. There was some some serious profit taking, likely some dilution off of high of day. This is a 15-minute chart that we were working on in the chat today. This is the symmetrical triangle pattern that had formed, and as you can see that there's this ascending support line and descending resistance, and so the share price had been bouncing off of this green line, and so we had this target here of down, bouncing off of this green line today, and so it did come down, hit right off of ascending support. Notice how all the candles formed right above that level, and so what's happening now is this pattern is coming to a flex point. It's coming to an end, and so tomorrow either the red line, the descending resistance line, is going to break, and that's going to signal more upside potential, or the green line is going to break, and that's going to signal downside risk. So the two levels to keep an eye on are 650. If it breaks above 650, closes above that level and starts forming candles above, that should signal that it's trying to break out higher. If you see it drop below 525, that's going to signal downside risk, and you could possibly see that 100 simple moving average at 433 tested. Okay, let's look at PLAG quickly here on a weekly chart. And as you can see on the weekly chart here, each candle represents 1 week of trading. You've got this big bounce this week. Notice it's a hollow red candle on this chart. That means that even though PLAG is down on the week, it's trading above the open. The open was down here, and so it's been climbing its way back up from around 350, 360 on the open, and you can see the big volume spike here. So the thing is it's above the 50-day simple or 50-week moving average. That's the green line here. That's the key level to hold at 491. If it were to drop below that level, that would signal downside risk. That would put it back into this previous channel. Notice the descending resistance, and then and descending support here in this downtrending channel. And so if it were to drop below that 50-week moving average, it would put it right back in that channel, and it could continue the previous pattern. If it stayed above the 50-week moving average, it could possibly break out higher. What it needs to get above, the big crucial level, is going to be this 100-week moving average at 860. You can see it traded above that level temporarily this week, but it pulled back below. A weekly close above and then turning into support should signal that PLAG wants to head higher. Once again, below 491 would signal downside risk. Okay, take a look at TTNP, another big winner today, closed up 36%. So congrats everyone. Yeah, so this does have our RSI at 65. That's a high level for the stock, as you can see, and so it's also at 87 on Fasto, but it still has room to run on RSI until that 70 overbought level. So the interesting development here on the chart was the gap fill today. So there was a gap between low of day on this candle and high of day on this candle, and today that gap did fill. You could see the upper wick cross that red line. The red line represents the top of the gap resistance level. It's always a tough level to break. Trading above it intraday and then dropping back below, that was a lock and gain signal. Dropping back below that 50-day simple moving average, the green line, after trading above intraday. Those were all signals to lock in gains, but it could push higher. That just through the rules, the trading rules that we use, that would be a signal to play safe, at least take some off the table there, because if it fails to break that resistance level and fails to get get above that 50-day simple moving average, it could pull back and consolidate. The key level to hold is going to be right here at EMA 4 at 0.388. If it holds that level, that's going to signal more upside potential. One of these two levels is going to break. It's either going to break above the green line and above the red line, above resistance, or it's going to drop below support. Support's the pink line. Notice how the candles are all right in that level. If it were to drop below the pink line, then you could see it come down there and test EMA 8 at 33. That's the downside risk. The upside potential, now it very well could break out tomorrow. It might even have a gap up open. It was a really strong move into the close. It's just it broke above the top of the gap and it failed to close above that level. And the same thing with the 50-day simple moving average. Many times when that happens, it signals its resistance, but it could easily break above. So trading above 50 tomorrow would be very bullish. And what you'd be looking for is a potential run up to that 100-day simple moving average at 72. Okay, yeah, so a big volume behind the move as well. So notice volume has been picking up. And so, yeah, it's all about, a gap fill, an upward gap fill many times is a climax event. And so you just have to see if it can break resistance tomorrow. Okay, let's look at CIDM. Closed up 53% today, another winner. There were lots of small caps, in play. They always are. And so even when the market's in turmoil, you can find, plays that are, stocks that are returning nice daily gains. If you look here at RSI, it's at 64, and so rarely does it get above that level. You have Fasto at 94, which is a very, temporarily overbought level. You do have a bullish crossover here on ADX with plus DI crossing over minus DI, so it signals the bulls are heating up. The big move today was the close above all these moving averages and above the 100-day or the 50-day simple moving average at 21 and the 100-day simple moving average at 136. Those are the two big levels. If it stays above that 100-day simple moving average, that'll be bullish, but it has some work to do. You have the 200, 300, and 400-day simple moving averages just above. It's going to be all about getting above 146 and this 140 resistance zone. If it can get above these three levels, it gets above that 300-day simple moving average at 141, then it could possibly keep pushing higher. But it has to turn this 140 to 146 level into support in order to make a run back up to the previous high up here around 170, 175 or so. Let's see here. Where is that? Yeah, around 172 or so. That would be the upside potential if it breaks above this 145 resistance zone. Is a potential run back up here into the 170s. Now today's candle did close above the upper Bollinger Band. You can see the upper Bollinger Band is this solid purple line currently at 134. And so many times when you get a close above the upper Bollinger Band, the candles work back into the bands, similar to right here. You can see a close here. It did push higher above the upper Bollinger Band here, but you could see here it worked back. And so many times when you do get a close, especially after a huge move like this, the candles will work back into the bands and test support. So we'll just have to see. So tomorrow, if it's failing to break 140 and you see it drop below 136, that's going to signal downside risk. It could, if it fails to break those levels, you're going to see it drop back down to this 50-day simple moving average at 121. That's going to be the big level to hold. If it comes down to that level and it holds, that could be a good reload level on a bounce for a technical bounce play. Now, if that level were to break, that would signal downside risk, and it could come down to that middle Bollinger Band. Okay, so above 146 signals upside potential, below 136 signals downside risk. Okay, let's look at DTEA here. Yeah, keep an eye on the stock. So we had lots of cannabis sector stocks that were bounced intraday today, and so we're going to see if they're going to follow through tomorrow. Keep an eye on DTEA here. Yeah, it's pulled back. It's down. What is it? 6 days in a row, and so as you can see here, it's hitting the green line, which is the support from August and September. And so the last two times that it hit this level, that's where it bounced and it had a nice rebound. And so we'll see if this will be the third time in a row that can happen. You could see in August a very nice rally off of that level, and then in September there was a nice rally as well. And even in September you could see it pushed all the way up here. It got so we'll see if it can follow through and do that. Follow through with the same pattern again. Now the downside risk is if this support level fails to hold, if it were to drop below, was below 225 maybe today, yeah, 225, then that's going to signal downside risk. It needs to stay above 225. It needs to close above that level. Closing below 225, and then it could it could keep heading lower. And so this is the big level. If you see that level hold, the level to break is going to be EMA 4 at 253. You can see all the candles have been riding that has been riding EMA 4 resistance level. Lower, once there's a close above that level, that's when it can get a nice bounce going. Today, a bullish reversal pattern did form. It did form bullish 3 gap downs, and so when you have the multiple gap downs, it does set up for a nice bounce. So you have the 1, 2, 3, and then you had almost a doji today. If that, that was so close to a doji, you notice the long lower wick on today's candle. That's a signal that people were loading off of low of day, trying to play the bounce. Now you could see that here on the DTEA 15-minute chart. You can see it's been in this downtrending channel, and it's hitting the descending resistance line right now, and so it's right at that level. That's lined up with the green line. That's the 50 simple moving average at 241. If you see it break above 241 and then above this 244, 245 level, that should be the signal, okay, DTEA is following through and it is pushing higher. And then you're looking for a run up in the 250s. The 100 simple moving average at 254 would be the next big level to break if it was to get above this 245 resistance level. Now to the downside, if it dropped below the middle Bollinger Band at 238, that's going to kill the bounce play here, and it's going to signal downside risk. It could come back down, test this 225 to 228 support zone. Okay, thanks a lot for viewing this video. If you'd like to learn more about charts and technical analysis, please come check out the chat. As you can see here, China is chilling out today. You have Nikkei Japan chilling out. You have the Asian markets are simmering down today, and so maybe the stock market can get a bounce tomorrow. Okay, so we've got VIX here still up, but everything's pretty flat, and so yeah, we'll see how Boeing does tomorrow with reporting earnings before the bell. That's going to be a big, it's going to set the tone, at least for the start of the day. All right, thanks a lot for viewing this video. If you'd like to learn more about charts and technical analysis, please come check out the chat. All right, thank you.